Day trading. Day trading involves buying and selling stocks within the same trading day to take advantage of short-term market volatility. This strategy requires a lot of research and attention to market trends, as well as quick decision-making skills. Day traders typically use technical analysis to identify patterns in stock prices and indicators such as moving averages, relative strength index, RSI, and volume to make trading decisions. Day trading can be very risky and is not recommended for inexperienced investors. Options trading. Options trading involves buying and selling options contracts, which give the buyer the right but not the obligation to buy or sell an underlying asset, such as a stock, at a set price within a specific time frame. Options can be used for hedging, speculation, or income generation. Options trading can be complex and requires a good understanding of the market and the risks involved. Forex trading. Forex trading involves buying and selling currencies to make profits from the fluctuation in exchange rates. Forex traders typically use technical analysis to identify trends and patterns in currency prices, as well as fundamental analysis to assess economic and political factors that could affect currency prices. Forex trading can be very risky and requires a good understanding of the market and the risks involved. Index funds. Index funds are a type of mutual fund that tracks a specific stock market index, such as the S&P 500. This is a good option for investors who want to diversify their portfolio and invest in a broad range of companies. Index funds offer low fees and are a passive investment strategy that requires minimal research and management. Individual stocks. Investing in individual stocks requires research and analysis of the company's financial health and market trends. This strategy can potentially yield high returns, but also comes with a higher risk. Investors should look for companies with strong fundamentals, such as a solid balance sheet, positive cash flow, and a competitive advantage in their industry. Real estate investment. Real estate investment involves buying and holding properties for long-term appreciation and rental income. This can provide a steady source of passive income. Real estate investing requires a good understanding of the local market and the costs involved, such as property taxes, maintenance, and repairs. Overall, it's important to have a well-diversified portfolio that balances risk and return. Investors should consult with a financial advisor and do their own research before making any investment decisions.